Hello and welcome to Pro Trader Strategies market commentary for Tuesday, June the 25th. My name is Eric Wilkinson. I'm here to teach you guys some different strategies you can implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get it on with some economic data. I mentioned this week is going to be pretty good for economic data. Kicking it off with today, we got here in the United States, not so much across the pond, three Fed governors. We got William Powell, who is the Fed chair, and Bullard all speaking today, most likely about economic policy, because we're kind of in that reprieve area between meetings where they can actually talk about what they plan for monetary policy. All right, but we got manufacturing index out of Richmond came in at 3, expected to be 7. Remember, we've been seeing these manufacturing numbers not come in so good, and this is continuing with that theme. And then we got CB consumer confidence coming in at 121, expected to be 132, so a miss there quite dramatically, really. They did revise last month's number down slightly as well, from 134.1 to 131.3. And then we got new home sales coming in at 626,000, expected to be 686,000. Yeah, they did revise last month's number up slightly by about 6,000. That is not making up for the 40,000, or actually 60,000 miss we got on the headline number. And like I mentioned, a couple of Fed governors speaking throughout the day today. So keep your eyes out for that, because that's probably going to be Fed policy centric. All right, we've got crude oil slightly coming off a little bit. We went up and tested that $58 a barrel again today, broke through that it's actually a psychological level, not really. It's more of this Fibonacci. We're finding resistance there. Now, we've talked about this time and time again. When we get the markets kind of trending sideways like this after a bit of a move, we're kind of getting this move here and then trend sideways like that. That usually is an indication we're either going to pop straight down or get a jack to the upside. Now, I don't want to see this move to the upside because that's at $60 a barrel. We don't want to see that, because that is going to really help slow the economy down, and we don't want to see that right now. The tariffs are already trying to do that, and a couple of other things that we're doing is really starting to slow down the economy. We don't want to see those extra dollars go into oil, especially at a time like this. We'd rather see that go into the economy elsewhere. All right, we've got gold futures moving again higher by about 16 ticks today. They were up almost 20 some odd earlier today, going up and testing the Fibonacci. Now this purple line with the Fibonacci is the I think it's like the 20-year Fibonacci, and basically I set it up from the low and the high up to that 1900 and stuff like that. So we've looked at the 20-year. This is the Fibonacci for that, and you can see it just lines up quite nicely with 1450. I thought we were going to test that this morning. After I put this Fibonacci in there, we started going for it. I thought, oh my gosh, we're going to hit that Fibonacci today. But we're coming up just slightly shy of that. It doesn't mean that it's out of the realm of being tested, but we were talking about this. I didn't really expect us to stay too far above 1400, but now it looks like we've gotten this. And if you were short throughout this and seen this move here, it is basically capitulation type scenario is what it's feeling like. We get those jack ups that fast, and it seems like a lot of people are on their heels and looking to dump out of it. So updated my Fibonacci there. So we've got some new lines. Interesting enough that this Fibonacci right here lines up with that psychological level of 1300 and the point of control. So a lot of these lines coming in with regards to some of the whether it's the monkey bars, Stoudemire, things of that nature. A lot of these lines are starting to make it a little bit more clear now, especially we've kind of gone over the 3 and 5 year areas. We need some other Fibonacci's in there to kind of give us some guidelines, and that 1450 is a pretty big one. All right, on to the bonds. Bonds still continuing to try to trudge higher. Today could be a big move for the bonds to the upside, especially if these Fed governors really start talking bearish and maybe talking about lowering interest rates. Remember, what last meeting, it was about 50-50. Some said to pause and some were saying ease, and actually one guy even said to raise rates. But it's going to be interesting to see how these different Fed governors in their different regions start reacting now that they've seen other Fed governors see some kinks in the armor in the economy. Maybe they aren't really seeing it now, but they are going to be a little bit more aware of it after talking to some of the other people in the different regions. VIX is moving higher, but that's because we're starting to see the equities show some weakness here. We've got the Dow Jones down about 40 points. Now that is about half back from what we were seeing earlier today. They were down almost 80 and back inside the value area. So we talk about this once we get above, like say for instance, that line right there with my pen, if it works, that line is the value area high. So 70% of the time and volume spent between these two areas here. So once we get overextended above these areas like this or below these areas, that's where the market has a tendency to slow down on volume and revert back to, you know, the point of control or back into the value area where the most time and volume's been spent. That looks like to me what we're trying to do here. You can see we've lost a little bit of momentum on a couple of these. That one looks like a continuation pattern, but we are looking like we're getting a bit of a confirmation to the downside here. So we could be looking at equities. It's going to be a big tell at the end of the day. We finish towards the lows. That's really going to look like confirmation, and a finish towards the high is going to kind of make it a little bit more fuzzy. All right, over to the NASDAQ. It's a little bit more clear because we're near the lows of the day, and the NASDAQ down almost 70 points, now just clicking 70. As you can see, we've tested the Fibonacci 74.65-ish area, and today are starting to pull back into the value area where we're going to start seeing some comfort from people, maybe a little bit more of the volatility coming out. But when we're at those extremes, it's going to make some people nervous, and that's where we're getting that volatility spike. This little bit of a correction today is going to help because I'm sure a lot of people are in the same camp as me. We've had this big run, and now they're going to be looking to buy some puts to protect themselves, and that could start to cause volatility to spike there. All right, E-mini S&Ps looks very similar to what we saw over there in the NASDAQ. It's down 13 points on the day, but again, still eyeing that whole value area where we're going back to where the most time and volume's been spent. And I've been talking about the market wanting to settle in and around this 2885 area, or just below 2900, but lining up with that point of control there where we would see some of this volume. Actually the volume is up here, but where the time is should shift up to where the volume node is, and I think we're going to see that after we get a little bit of a correction. We're going to see some of that time spent there and volatility come out with that market settling down. All right, let's take a look at the daily chart of the E-mini S&Ps. We were talking about with the market inside day yesterday, very outside today, and really no overnight or no attempt to flush out the overnight inventory. You can see almost right off the bat from the open, we just had a sell-off to the downside, really no attempt. That's a pretty bearish sign going forward. And other than that, I haven't added anything or taken anything out of my portfolio. Yesterday, I was getting a little bit nervous. We were starting to make some of those moves and was making me feel a little bit uncomfortable. Today, we're getting a correction coming back, so things are starting to look a little bit better in my portfolio. I'm not going to touch it right now. I'm going to kind of wait to see how all of these levers and pulleys shake out in the markets before I start really making any assumptions on directional moves. All right, so that's about it. Sorry, it was a pretty quick one though today for you. Get you out of here early, get you on with your trading day, and I hope everybody's having a great one. Also, like us on the Facebook channel, give us a thumbs up or follow our page, because once we get these videos out, we're putting them out there on Facebook so that you guys can have these a little bit earlier than when it was taking us before. We've kind of streamlined that process to get them out faster so that you guys can take action. All right, that's all I got. If you can't take that, take it easy.